Holidays over. It's likely to be a difficult meeting for the European Central Bank next week, and here to guide us through are Sarah and Pete. Sarah, inflation in the Eurozone is now down at just 0.3%, we learned today. What are the ECB going to do about it?
Yeah, this is a really weak reading and it's almost at a 5-year low. I think the two important things to keep in mind before this meeting. You can see the new staff projections, and currently the ECB projects that inflation will average 0.7% in 2014. And as you said, with inflation at 0.3, this seems pretty much unlikely.
Yeah.
So we could see some cuts to the staff projections.
Right.
That's the first part. The second part is that doesn't necessarily mean that we'd see the ECB actually doing something next week.
Right.
So they could cut staff projections, but they could still Draghi could reiterate that the bank is ready to launch some easing measures if warranted by the inflation outlook, all this stuff. But it seems a bit unlikely that it'll happen already on Thursday.
Is that going to be enough, Pete, to satisfy people?
That's very debatable. I mean, at the Jackson Hole meeting, he indicated a slightly softer tone.
This is Draghi, right?
This is Draghi, yes. Yeah. And that was. His speech was leapt upon by those in the market as some sort of indication that this meeting would result in some form of easing measures.
Yeah.
As Sarah said, I mean, he's going to point out the targeted LTRO has yet to come into effect.
Yeah.
So it's unlikely that something new will come in. Although I did see today that PMB Paribas are calling for more interest rate cuts.
Right.
Yeah,
okay.
I'm seeing a few banks calling for interest rate cuts as well, but there are some ECB sources this week that said that the inflation data had to be really, really, really weak for them to do anything. So it's debatable.
0.3 is weak.
Okay.
Yeah.
One of Europe's big problems really at the moment is that Germany isn't firing. We'll learn a bit more from the data there next week. What are you expecting there, Sarah?
Well, we both have the industrial orders and the industrial production, and it's been pretty weak. In the second quarter in Germany, actually, the country fell back into contraction. So it'll be interesting to see. This is the July data, so if we're starting the third quarter on a bit of a better note, which we aren't really that much, it's probably going to be some pretty weak numbers, although
Right.
industrial orders could rise a bit. But I'd say it's one of those things that we should look out for next week for sure.
Okay, here in the UK, the Bank of England, we've seen a division in policy there. Some members calling for interest rates already, but do we expect actually any change in policy next week?
I don't think the data that's occurred over the last month has been sufficient to push the Bank of England's Monetary Policy Committee into a majority in favour of a hike. And as you said, there were two members that voted for a hike last time around, but I think it's unlikely that that will follow through.
So the debate is getting keener, but not time to act yet.
Not yet.
All right, we'll have some PMI numbers for the UK before that. Sarah, what are the numbers looking like there?
Yeah, we actually have all the PMIs, manufacturing, services, and construction next week. As for the rest of Europe, we're probably going to see some bit of a fallback in the numbers, but for all three, it's probably going to be above the 50 level that indicates expansion. So still pretty good.
Okay, and finally to end the week, we have US non-farm payrolls. Always a fun end to the week. What sort of number are you expecting there this time, Pete?
I think we're still looking at a figure above 200,000, around the 200,000 level. It's been around 230,000, I think it's the average for the last 6 months.
And is that telling us that the US economy is still strong, recovering? What is it really telling us?
It is saying growth in the jobs market, but the growth rate is the unemployment rate is still 6.2%.
Right.
I mean, it's been quite difficult to get that down.
Yeah.
And also, as in the UK, the wages are not growing by any great extent. So I don't think that Janet Yellen's going to be under pressure to do anything immediately.
Okay.
No. And she's also said she's worried about the underuse of the labour force. So it seems like there's still a key
debate there. Thanks very much, guys.